Hello everybody. Very short presentation, and can you hear me okay? Yep, great. All right. Elizabeth Hill project, arguably Australia's highest silver grade project that's not in production. The aim is to get us into production as quickly as possible. Those of you who remember, I think it's a 90s movie, Beverly Hills Chihuahua. We are mighty, hear us roar. Okay. The project is small. Don't judge us on the tonnes, it's on the contained ounce potential. So let's go with that. Normal disclaimers. Nothing I say you can believe or trust. But invest. Okay. The Elizabeth Hills project's been around for a while. It was discovered as part of oil and gas exploration in the Pilbara in the 80s and developed in the 90s, mined from 1999 through to 2000. Only 2 years. Mining stopped as a result of $5 an ounce silver prices and a dispute between the two owners, JV partners of the company. When that was resolved, project was sold off. Mining had stopped and it wasn't advanced any further. We've been doing work on this as West Coast Silver since 2025, and the results from our drilling in 2025 clearly show that the deposit was growing. So why should you be interested in us? One, it's a strategic location. Being near Karratha, we actually have access to all of Rio Tinto's I should say, it's a Rio Tinto town, and so it supports mining. We have power infrastructure, fly-in, fly-out workforce support facilities. We have a granted mining lease. That lease is still current. It was an underground mine. Underground, but it was only mining between 60 metres and 100 metres of surface. So a very shallow open pit, a very shallow underground mine. There are reasons why it was an underground mine versus an open pit, and that's to our advantage. We have a proven production pedigree. They mined 1.2 million ounces in 2 years at a grade of over 2,000 gram per tonne, which is phenomenal. And that came out from only 16,000 tonne of material from a depth of 60 to 100 metres. Okay. We have processing optionality. Originally, they just simply used gravity Whiffley tables under a corrugated iron roof to process the material, and they were literally hand sorting the material, which is why you're seeing such incredible grades being reported. Tails processing plants being recycled 2 times. We're looking at recycling at a third. That's how much silver was actually being jettisoned out of the gravity circuit. Gravity's great, but it's not an efficient method of processing. Some of our investment highlights. We've just put out a baseline mineral resource estimate. We didn't want to put this mineral resource estimate out. I was hoping to put an estimate out at the end of the year because we've got drilling going at the moment and growing on what we've got at the moment. But because it ended up being material, we did the right thing and we put it out. And it was a healthy start number that we're growing from now. 2.8 million ounces at 617 gram per tonne silver, okay? And here's the kicker, it's only from about 140,000 tonne of material mined. Okay, so the optimised open pit is essentially 200 metres by 300 metres and goes down to about 130 metres. It takes everything, including the historic mining, the pillars, the production faces, everything that was left behind goes in. The grade, that's without saying, mining lease, it's definitely a benefit. It's not the panacea. A mining lease doesn't absolve us of other startup requirements and permits and studies, but it's a long way towards it. The ore deposit is open in all direction. It's 86% inferred at the moment. That means that we have to convert 86% to an indicated level of confidence to get a reserve. But with these types of coarse silver deposits, as with gold, as a rule of thumb, as you drill tighter, rather than the grade going down and the metal content going down as a result of the grade going down, it generally goes up because the silver is concentrated in pockets or jewellery boxes of mineralisation that you can't see on a wide drill spacing. Gympie gold's an example of that. Drill tighter, you find these little pockets, and I'll show you. So we've got 6,000 plus metres on the go at the moment, expanding the ore deposit beyond the actual optimised pit shell and deeper. Our strategy moving forwards, and we've got about $5.4 million in the bank at the moment. That's enough to fund our drilling at the moment, is to get to a scoping study and start the scoping study at the end of the year. A second resource update with our drilling results in Q4 leading into the scoping study. So we're going to do a development and growth formula moving forward. We're going to take advantage of looking at West Australia's small mining operation facility, which helps us streamline getting into production and growing, so that essentially concept is open pit, but while we're doing the open pit, we're preparing the next open pit or the next cutback or the underground extension. So on the right hand side of the current diagram, you'll see the very large open pit. We didn't have enough geotechnical data for the consultants to build to do a 55-60 degree batter angle on the pit in competent granites and ultramafics, so they went with a conservative 45 degree into ramp slope. So we can tighten on that. But we can see in the green, that's the historic mining workings. There were 4 levels that were extracted, projected to surface, and around that is the remaining mineralisation projected to surface. That's what contains the 2.8 million ounces. The green dots are our drilling in 2026 that's underway at the moment. First results are due in 2 weeks, and we should have a steady stream of results coming out over 3 months. You can see the trend of mineralisation going north, but there's also a trend going beneath the actual ore body. The red dot, yellow dots in there are surface air core drilling, which show that mineralisation is trending outside of the pit, and I'm quite pleased with outcomes coming through at the moment. I can't discuss them any further. The resource increase at Elizabeth Hill, last time they did it was in 2011, going public. There have been a number of internal studies, but we used the 2011 for comparison. We achieved 104% growth in tonnes, 390% growth in grade, and 898% growth in silver. It's still modest by comparison with other companies on tonnes, so we don't tend to look at tonnes. We'll show you some slides why. As I said, the silver is extremely high grade, and there's a specimen that weighs over 3,000, that's over 3,000 ounces in the Perth Mint, called the Carafa Queen, weighs 145 kilogram. You're welcome to see it. It's quite a show if you're at the Perth Mint. Free plug for them. Go see the gold pouring show. It's quite good. But we get these things. The processing optionality here, we've got a metallurgical study on the way. Conventional gravity at the front end, but we know that's not fully efficient. A Merrill-Crowe process likely after that, and a finishing flotation circuit. The project doesn't just have native silver, it also has silver sulfides, which contribute to the lower grade portion of the mineralisation. Acanthite, galena hosted mineralisation, and small amounts of sulfur salts. There aren't the penalty elements you see in other projects, and we're not a byproduct mine. Many of the silver projects that you see being advanced are being called silver projects, but they're actually polymetallic mines, which have simply rebadged themselves as silver projects. They still have the lead, the zinc, and other metals, which are the real cash makers in their profile. It's sexy to be silver at the moment. So the metallurgical study will tell us how we can achieve that 90% plus recovery on this project and gain real value from the low-grade material. In pit, when you're doing a open pit, we can take this down to 20 gram per tonne silver. We actually need to take it down, because any of you familiar with processing know that processing plants don't like high grade. They don't like spikes. They don't like lows. You need the low grade to blend it to a product that is consistent. This slide I've thrown in because, hell, I'm not going to win on tonnes, but I can win on grade. So you can see our competitors down the bottom, and they have some pretty big ounces down there, okay, and tonnages. But we are really up there on the grade. We stand alone. So a 2-3 year mine life open pit delivers 2.8 million ounces. The free cash flow. There's Breakaway Resources producing a investment report in the next couple of days. That'll become available to everybody. There's some really neat free cash flow numbers that come out of that, which put a smile on everybody's faces. So small is mighty. We are the chihuahua that roars. The cut-off grade is important. We've modelled at 20 gram per tonne to get every bit of silver out, so we have blending capacity and being realistic within an open pit. But if we were to fractionally increase the cut-off grade to 60 gram per tonne, we still have 2.7 million ounces. That shows you the sensitivity. But that 2.7 million ounces is at over 1,000 gram per tonne silver. Okay? That's incredible. It's there. In long section, this is what the ore body looks like. I didn't have time to splice in the latest resource blocks. This is the gram metre plot with the colours being hotter, meaning higher grade. You can see the mined area being the brownish material right in the centre called stope and void, with grade decreasing away from the void. The optimised pit shell is around the actual mineralisation, as you can see in the diagram as the red line. The various dots that you can see around the actual mineralisation is the drilling that's happening right at the moment to extend mineralisation. You can see that mineralisation on the left-hand side of the diagram is trending to the north, and we also have production drilling from underground before they stopped, showing that there was another lens forming up at depth. So we're testing that at the moment. So the opportunity is visible, it's tangible, and we're now in the process of substantiating it. The model is quite simple. We're not there on the scale of tonnes with our analogues overseas. We have analogues in Morocco, the Bouazer system, which is a series of vein-style deposits. These deposits are in the tens of millions of ounces of silver per clusters. It's like a VMS. Once you find one, you find the next vein system, or the next, as we call it, West Australian style, pearl on a string. Okay, so I think Paspaley Pearls will probably love us for that. We have plenty of those. Cobalt Ontario also has similar styles of mineralisation, and they're in the hundreds of millions of ounces of silver. What links all of them is the presence of low levels of cobalt. In Canada, that cobalt is economically significant. We do also have small amounts of cobalt, but I'm not telling anybody here that it's commercial. It's just a signature, it's a footprint. It's Elizabeth Hill, we believe, is part of a much larger system. And on the right-hand side is the product of geophysics, surface geochem, air core, showing us in those red dots that there are nexus sites where all the data comes together saying drill here, okay, X marks the spot. So exploration has a bright future moving ahead, testing these targets that are mineralised, and hopefully we'll be in a multi-pit situation over the next few years. Pretty much the same thing, but this slide's really talking about a 180 square kilometre package where we have the rights to silver exploration. So the story here is its growth. Here's the development timeline. You can see we've done the maiden resource. The drilling is clustering above that in the yellows and oranges and blues, of grey being the assay delivery times. Updated MRE in Q4. Thank you very, very much.